Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Invesco QQQ Trust. Ticker symbol QQQ. It represents the tech sector. We have this ETF, and I showed last week that my forecast lines were that we would move up early in the week, test this resistance, and then start to pull back. And you'll see right here in the data box there, on December 28th was my pivot point. And we did just that. We hit the high right there, and then we started to pull back Wednesday, Thursday, and Friday. Yesterday, we had a long shadow above that candle, which is bearish. And so if you look at the oscillators turning down, you can see the CCI has already crossed with a sell signal on Thursday. I'll magnify that for you so you can see how it crossed that plus 100 line. It's that red line. And we still have a wide divergence from this 20-period moving average. So I'm not going to change anything on this forecast. I'm going to leave my downside target that is $391.14. So it's $391.14. I'm keeping that in place. The end of that line is right around the 3rd of January. So we might go a little bit beyond that date, but I'm going to leave it in place. It doesn't need to be changed at all. You can see that pivot point again is pretty obvious, and the volume is starting to pick up on the way down. So keep your stops in place, and we'll see whether or not that 20-period moving average acts as a support level. Now, if we go to IWM, which is basically the Russell 2000 ETF, tracking the small caps there, you can see that I left my lines again from last week. A little bit hard to see, but we put this in place last Friday, and I said we would move up slightly early in the week, test this resistance right here. And look at that. On Tuesday, we hit that resistance to the penny and then pivoted down with a bearish harami right here. And you can see that Thursday, again, as I magnify that, we have a long shadow above that candle. So I don't think we're going to move much higher next week than this. We could, of course, but I think that we're still going to drop a little bit more early in the week especially. So I'm going to extend this out just like that to more or less prolong the date. That's going to go out to January 4th. Pretty much matching that target right there. So I'm going to delete that right there and leave this one in place as I move it to the side. You can see the oscillators are still hinging lower. CCI is hinging lower. It tried to get above the overbought mark right there at plus 100, but it failed to do that. Just pivoted right down. And the volume again is increasing on the way down. So that is IWM. If we look at the spiders, this is the S&P 500. We set a new high and we formed a bearish engulfing candle. Let me zoom that in for you right there. The bearish engulfing candle is the most bearish candle that you're going to find, coupled with the bearish harami. And we don't see too many of these, but when they show up, you definitely do not want to ignore them. Remember, this was Thursday, and then today we had a lower high, lower low. Very similar to a shooting star, but look at that increase in volume on the way down. That tells us that the sellers are motivated. We have the stochastics is hinging lower. The CCI crossed with a sell signal right there. You see that? And we have a gap below the market right there that is going to act as a price magnet. We have another gap way below the market down here. So I'm leaving this in place for the time being. That is a downside price target on the S&P 462.27. That's going out a little bit more in time. That goes out to January 5th. So we'll see how that works out. But again, that increase in volume is telling us the sellers are getting motivated. Now let's take a look at the VIX real quick. This is the inverse relationship to the S&P. And you can see that yesterday we had a green candle. It's very hard to see. And today we had an inverted hammer. That's bullish. Now I'm leaving this in place. If you look at the date on that, that's January 23rd. There is a gap above the market right there. As I magnify that, there's a gap above the market on the VIX that will most definitely fill, because all gaps on the VIX fill because it's an oscillating index. It's not a stock. And so that will most likely be drawn up. That is bearish for the market, by the way. So again, keep your stops in place. See, we have a buy signal on the VIX down here on the CCI. The stochastics is starting to move up, almost crossing with a buy signal. And again, that's a longer term target of 25.71 for the VIX. Now going to diamonds, we are coming to a close. Monday and Tuesday is going to be the end of the time period for the year-end rally. And so it worked out well, just like many other years in the past where we were up more than 1.4% during that time period. But remember, as we come into the new year, we will most likely have some tax selling coming in because people are deferring that tax bill. They want to take some profits on stocks, but they don't want to pay the taxes right away. So they're going to start selling in January 2022. Not everyone, but it will put pressure on the market. So I'm keeping this longer term target in place, but I'm also going to draw a shorter term price target like this. I think we can move down to test that moving average, maybe bounce a little bit and then come down. Right? There's a gap down here below the market. What I was looking at earlier today was one of the reasons I want to keep that shorter term target at that moving average is I was using the Fibonacci retracements to determine where the pullback point would be. And I took this low measured to yesterday's high, and look at that. The 50% is right at the moving average, and my pullback goal right here, short-term target is 359.65. That's right at the 38.2 Fibonacci pullback point. Now remember, there's a gap down here that I think will ultimately fill. It's not guaranteed, but 80% chance that that will happen. And we'll have to see what the selling pressure looks like next week. I'm going to leave my Fibonacci retracement lines in place for next week so we can see exactly how that price action worked out. And that is it for 2021. Thank you so much for following us. If you like this, please just hit the like button, subscribe, share, do what you like to do to be an ambassador for technical analysis. And of course, if you hit the notification bell, you will be notified when these alerts go out every Friday. So again, Happy New Year, and we'll talk to you next year. So long.